Alright, it's 2025 and the stock market is being a moody teen. After some emotional lows, the market got some therapy, and we're right back where 2025 started. So what stocks are interesting right now? Which ones will survive this market breakdown? Let's find some and rank them. I took the top 20 investors on StockBossUp, let the algorithm ignore the most emotionally volatile ones, and then chose the 10 most obscure opportunities, the hidden gems of the stock market. Here are the top 10 stocks for Q1 2025. Before I get into NSIT Enterprises, let me just say the Common Investors video, 3 growth stocks you have probably never heard of, is great because they really are under the radar. Casey's General Store? Where did this $14 billion growth stock come from? A gas station that serves the boonies? That's literally how the company describes themselves. AeroVironment is the other growth gem, which I didn't know about, but I definitely know about their switchblades making an impact in Ukraine. What a great stock to highlight as the unmanned vehicle market continues to grow, but I'm sticking with the more grounded choice here. NSIT Enterprises is a small cap stock that has beaten the S&P 500 just about every year for the past decade. They are all about cloud computing and all the solutions around it, and they have niched into some really interesting businesses. Wow, they are in on esports? Like they basically set up the event regardless if it's online or in person or whatever. What a neat niche. Anyways, I can't speak enough of how great these picks are from the common investor. Each one was more interesting than the next, both in terms of products and as an investment opportunity. Okay, I'll be honest. Wise Intelligent is making this list because he is objectively one of the top investors. I was going to make a joke at the end of the video about his stocks always being the bubble pick, but his APR is 18.6%. He has beaten the market for 3 years now. Even though he's our rapper from Rap Snacks, he's also just a great investor, period. So we're giving the number 9 spot to him and his stock idea JPMorgan. Yeah, it's not an obscure stock. I'm already breaking my own rules. But in an environment where DeepSeek is sending tremors, there's an opportunity to pick up some solid blue chips while Mr. Market is distracted. JPMorgan is the business of banking. They basically do anything banking on the world stage. Need someone to broker a blockbuster merger? Oh, hello JPMorgan. Are you a tech growth company like Nvidia, Microsoft, or Amazon? Yeah, they all bank with JPMorgan also. If you're big and you need a bank, JPMorgan is your go-to choice. Hey, did you know that some guy named Trump is in the White House? I guess he declared an energy emergency? Did you know the US is the 4th largest exporter of oil? Neat. Dividend data brings us some great ideas to take advantage of this policy change. At a 20% APR, Dividend Data has been sharing some phenomenal ideas. Texas Pacific Land Trust is no joke and could really benefit from Trump's energy policy. I'm not just picking the stock because I'm binge watching Landman on Paramount Plus with my wife. With super efficient gross margins, constant dividend growth, large windfall dividend payouts, and years of price growth, this unconventional stock is truly a hidden gem. Basically, this company owns the land rights for oil, minerals, and water, and they are raking in the royalties. After they pay their minimal business cost, they pay out the rest in dividends. This business is simple, yet effective for its investors. Go check out Dividend Data's full video on this and 4 other awesome energy stocks. I really can't do justice and explain how great of a stock idea this is like he can. Our number 7 pick comes from the Dream Green Show. At a 27% APR, the Dream Green Show isn't messing around with their stock picks. He is in it to win it with you. So I've never seen a Dutch Brothers in my life, and it turns out that's because they are mainly on the West Coast. And boy, is there some empty area on the East Coast that Dutch Bros can penetrate. If they can become the alternative to Starbucks, well then you have a lot of opportunity to grow. The Dream Green Show also notes that Dutch Brothers just has better drinks than Starbucks, and they just bought back some of the franchises to further improve customer service. I also like his note about their app. Because customers are depositing money into it, the app's kind of like a bank for Dutch Bros. I also like that they have shakes and smoothies as well. Based on no market data other than my own tastes, I think smoothies can really take market share from other drinks, especially when marketed side by side with coffee. Coffee in the morning, smoothies in the evening. Anyways, just another great stock pick from the Dream Green Show. Go check him out. And does anyone else keep thinking Mean Green Turtle Fighting Machine Show? Is that intentional? By sheer coincidence, we are talking about another coffee stock. From Dividend Power and their article, Coffee Stocks with Dividends, we bring you Restaurant Brands International. I had no idea what Restaurant Brands International was going to be. I thought maybe they provided services to restaurants, or maybe they provided coffee beans to restaurants. Oh no, wait, this is the owner of Hortons, one of the largest coffee brands in North America. And it owns Burger King? Wow, that happened in 2014. 3G Capital, a private equity firm, flipped Burger King in 2014 after only 4 years of running it. That was probably a really good flip. And they own Popeyes and Firehouse Sub. What a great find from Dividend Power. This dividend stock currently yields 3.6%. It's becoming what Yum Brands is, a consolidated fast food conglomerate. So don't expect blockbuster growth from Restaurant Brands. Instead, expect long-term price growth as the company makes more acquisitions and consistently grows its dividend. This one from Ailes World stock is highly risky. He admits it, I admit it. It's his high-risk stock pick for February. Let's make that clear right now. How do you handle emotional roller coasters? If the answer is with bourbon, avoid this stock. I think Ale does a really good job giving the context around this stock pick. This is not for the faint of heart. This is a very long-term stock pick, and he's only making a token investment in this one. But the opportunity is really there. Multiple companies have put their faith in this weird, unholy convergence of AI and healthcare. NVIDIA alone made a $50 million investment in the company, and they have contracts that, if they hit the milestones, are worth billions. This stock does raise an eyebrow. Like, what do you mean it popped off during the pandemic, only for its price to fade away again? What do you mean it's been around since 2013, but is just now starting to get into AI? All the stocks on this list require you to do some research, but for Recursion Pharmaceutical, you better go a little deeper into the weeds. Ailes' world of stock picks are tracking at a 33% APR, so take a look at his ideas. You know what I love about Nanalyze? Most of his videos talk about stock ideas you don't want to buy. I think good investors talk about the stocks they walk away from, because investing really is about avoiding losers. And he really does choose great stocks. At a 40% APR, he's doing a really great job choosing good stocks. Of all his picks, I'm choosing Cameco because it's a uranium play, and I know nothing about the uranium market. So Cameco is a market leader, but also has some risky exposure to Russia. Their recent acquisition of Westinghouse really helps its position as the pick and shovel company for the uranium industry. While they have exposure to uranium prices, they do break out their fixed contracts in the reports to showcase that they are trying to mitigate this risk. Check out all of his thoughts on Cameco. He goes really deep into the miner's dilemma. Like, how much exposure do you really want to uranium? How would horizontal expansion help Cameco's stock? This is all great insight into not just how to think in the uranium market, but also how you should analyze pure play mining and energy companies in general. I also like that Nanalyze is recording on the beach. All stock analysis should be done in front of a beach. Are you natty? So, hot take, Scott's stock due diligence is my favorite. Just the facts, ma'am. That's how I like it. Give me the numbers and give me the discounted cash flow. Delicious. So my strange attachment to financial calculations aside, Scott's investment ideas are very serious. Currently pushing above a 40% APR, these ideas are nothing to sneeze at. Okay, so getting back to NAT, or Nordic American Tankers, the stock currently has a 14% dividend yield and a great P/E ratio of around 8. NAT is all about Suezmax oil tankers. These are the biggest ships that can navigate the Suez Canal. The company holds only these Suezmax oil tankers and have paid a dividend consistently for over a decade. Estimates say that the dividend should grow to 18% next year, which Scott is skeptical of. And I think he's right to be skeptical. But do some research in this stock. It's an interesting company in the maritime shipping sector. Alright, I'll admit it. I saw the stock symbol ELF and I chose it on that alone. I was really thinking ELF, the mythical Christmas creature. I had literally no idea it was a cosmetic company. But while I thought this was a joke pick, Dividend Talks isn't messing around. First off, their picks have made a killing in 2025. Prologis and Uber were incredible picks. It's why their pick is up here at number 2 with an incredible 42% APR. So for the uninitiated, like myself, ELF stands for Eye, Lips, and Face. The company was started in 2004 with the idea to bring high-quality, low-cost cosmetics to the market. Today, the company has leaned into social media and have their own app to sell products. They truly are disruptors as they have taken real market share away from legacy brands. And just a side note, their investor deck is the most colorful and lively presentation I have ever seen. I couldn't stop looking at this thing. Dividend Talk does a great job breaking down the valuation. There is real value here backed up by strong institutional ownership who probably see the writing on the wall. Consistent positive earnings growth, and a real plan to continue disrupting the sector just sets ELF on course to be a great value stock. Finally, it was interesting how out of sync ELF is with the rest of the cosmetics sector. I think these really are the clues that it's a disruptor. Yeah, I keep saying disruptor, but when you walk into a room and repeatedly slap everyone else there, it's disruptive. A high PE ratio over its peers, higher revenue growth versus its peers, and a better gross profit margin against its peers really shows it's doing something different, not just by leaning into social media, but just as a different kind of cosmetic business. Our number 1 stock comes from Sharp Investing. Sharp Investing broke my brain. You see, when someone has a ridiculously high annual percentage return, it's usually because they got really lucky on one stock. To compensate, StockBossUp just flags them as too volatile. To do what Sharp Investing has done, they would have had to have picked multiple winners consistently. So yeah, just a glitch in the matrix. Let's just go ahead and fix the glitch. Well, let's just see how his picks have done year to date in about a 1-month time frame. So Micron Technologies, 10%, StoneCo, 14%, PDD Holdings, 17%, Alibaba, 19%, Ecopetrol, 22%, New Holdings, 32%, and AppLovin at a freaking 51%. His APR is off the charts because he earned in 1 month what most investors earn in 2 years. If this was poker, Mr. Market would be sweating over a pair of jacks while Sharp Investing hit a full house 6 freaking hands in a row. Okay, our number 1 stock pick is PagBank, a Brazilian fintech company. So Mike Sharp does a great job really giving the history of how this company came to prominence. Basically, the big banks in Brazil were underserving small merchants. PagBank stepped in with other market innovators like StoneCo to provide services to these underserved merchants. Now that they took this market segment, they are looking to expand. So warning, this is a swing trade more than an investment. Mike is seeing some inefficiencies with the stock price and is taking a measured risk with the stock hitting a support level. But if you're interested in this company, know that the company helped 32 million small underserved merchants get access to banking. Just an overall good service for entrepreneurs in Brazil. Check out Sharp Investing on YouTube along with the other top investor picks. Links to their full analysis videos in the comments below. And if you want to see the best stock ideas from only the best investors, check out the competition on the StockBossUp app. Thanks for watching.